Booming property prices are creating record wealth. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your Stein or cup of $1 hashtag not sponsored coffee, and let's look at this article from ABC News. So, booming property prices push household wealth to record levels in Australia. So, the wealth effect. Houses go up in value. Everyone feels more wealthy. Your house is worth more. Suddenly, that purchase you made through through complete smart investment decisions that you've made has, resulted in you having a very wealthy portfolio. Sure, most of it's tied up in property that you can't access, but that still will encourage you to go and spend. And if your house is worth $1 million, well, then you deserve having that expensive couch, that expensive fridge, because $1 million house needs those things. Do you see the trap here, guys? Do you see the potential? Do you see why our politicians want to keep house prices sky high? So let's look at this and how hard it will be for those trying to get in. So booming property prices have pushed Australia's household wealth to record levels, despite hundreds of thousands of people remaining unemployed. The value of Australia's residential property jumped by roughly $250 billion in the last 3 months of last year. It followed an increase in property values of more than $200 billion in the September quarter. According to the ABS, the combination of rising property prices and a recovery on stock markets saw total household wealth grow by $501 billion in the December quarter, the largest quarterly growth since December 2009. The recovery in stock markets in the last half of 2020 pushed the value of Australia's superannuation reserves back above pre-pandemic levels. Superannuation reserves increased by $166 billion in the December quarter, and reserves are now fully recovered from the losses experienced in the March quarter of 2020. Household wealth hits a new record despite the recession. It means total household wealth in Australia, $12 trillion, wealth per person of $467,709, are both sitting at record levels. What about our debt? What about our record levels of debt? We need to look at that. And this is just showing you that those that are in property and those that are not, it's going to be a big difference. ABS officials said the Reserve Bank's expansionary monetary policy and government support for the housing sector had driven the surge in wealth for property owners. The December quarter growth in household wealth was driven by rising residential property prices, reflecting record low interest rates, support through government programs such as the First Home Buyer and Home Builder schemes, and pent-up demand from buyers, said Catherine Keenan, the head of finance and wealth at ABS. The growth in residential assets was seen across both owner-occupier and investor housing in the December quarter. Owner-occupier housing loans grew 1.9%, which was the strongest growth seen in 4 years, while investor housing loans grew 0.4%, which was the first positive growth recorded in the past 2 years. ABS data also showed that despite the surge in property prices, the housing debt-to-income ratio decreased from 139.2 to 139 in the December quarter, as growth in household incomes 1.2% was greater than household debt. Well, there you go. Wow, we're still at 139% household debt to income. That's meant to be celebrated, everyone. At least we've gone down a bit, and we're not the best in the world with regards to our debt-to-income ratios. We can get there, Aussies. Come on, we can get there. The growth in income was driven by government income support packages. There you go. Implemented in response to the pandemic, including JobKeeper and the coronavirus supplement. The housing debt-to-income ratio has now fallen for the past 12 months, recording a 2.5% fall through the year, which was the largest fall since 1990. Concerns about property prices. Australian property prices returned to record highs in January, exceeding the peak reached in 2017. The increase was broad-based, with every city and broader region recording a rise in property prices. The next month, in February, house prices posted their sharpest monthly increase since August 2003, with analysts at CoreLogic saying the market was now entrenched in one of its strongest growth phases on record. Eliza Owen, CoreLogic's head Australian research, said few people were selling and there were lots of buyers scrambling for property. This is really a function of record low mortgage rates, as a very strong economic recovery, and the fact that buyer demand is very strong against relatively low levels of stock, she said. I think that is the main thing here. Buyers are going crazy. People are wanting to get into property. Maybe they're just sick and tired of looking. And people who don't need to sell aren't. How many of them have had mortgage holidays and been able to ride out this period, which otherwise they wouldn't have? So we'd either need to see some more restrained lending conditions or higher levels of supply to really start to ease the growth that we're seeing in the housing market at the moment. This week, ANZ economists have significantly lifted their forecast for house prices, saying they expect prices to rise by 17% around the country this year. House prices haven't risen as much nationally since the late 1980s property boom. Treasury warns unemployment rate could rise a little. And remember, they're talking about the ABS rate, the Roy Morgan rates. Double it, guys. Double it. The national unemployment rate is currently at 5.8%, having fallen from 6.3% in January. Officially, more than 805,000 Australians remain unemployed, down from 1 million in July. Treasury officials have warned the unemployment rate could rise a little in coming months. They say an extra 100 to 150,000 people could lose employment after the JobKeeper wage subsidy scheme ends this week too. This does not mean there will be a commensurate increase in unemployment. Stephen Kennedy, Secretary to the Federal Treasury, told Senate estimates on Wednesday. Our view is that the adjustment away from JobKeeper will be manageable and that employment will continue to increase over the course of this year, although the unemployment rate could rise a little over the coming months, resuming its downward trajectory. So they're predicting that, well, we're getting wealthier, everyone. The wealth effect is here. Unemployment is predicted to go back up and then return back down. But what do you think? Should we be concerned that our income to debt ratio is 139%? Look at where it was back in 2008. Even then, it's still over 115. There you go. Do you feel wealthier, everyone? Are you going to rush out and spend? What do you think? As always, thanks for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions in the comments down below. If you're a fan of the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you next time. Bye for now.